Hello, trading family. If you ever wanted to automatically move your stop losses to break even and trade risk-free, then I've got your solution. Stay tuned. That's right. What I'm going to do is I'm going to show you step by step how to programmatically manage your stop losses, moving them to break even once a certain target is met. Usually when trading, your TP1, your take profit one, that first target would either you would take some partials, you take some profits, and you would take risk off the table by moving your stop losses, which is always going to be in drawdown, right? When you first start, moving that up to a break-even scenario. So if price shot up to your take profit one, and then it returned back down to your open price, it would close that position automatically. So before we get started, let me introduce myself. I am the Algo King. For those that don't know me, I am the Algo King. And I basically leverage my 20+ professional years of software development experience and my trading experience to write automatic bots, algorithms, expert advisors, whatever you want to call it, and they will automatically enter and exit my trades for huge profits. If you want to learn more, you can always take a look at the links in the description of this video, and you'll see the links to my Instagram where you can get more information. You can see my lightning bolt strategy in action, yielding major results. So let's get started. So what is the concept behind the stops to break even? Well, let's draw it out. Let's draw out the concept. We all know, as I just explained, you want to basically move your stops to break even, removing risk. So let's draw it out here. So price is moving up, it's moving upward. And basically what you've done is at this point on the opening price of this new bar, what you've done is you have entered you've created an entry, you've entered the market, right? Price shoots up. Once you've entered the market, you had a stop loss, say it's at a previous candlestick low, and say here's where your stop loss is. And now you had a target set for your TP1 and say it's 20 pips, 20 pips, right? Once 20 pips is met, what you want to do is that would be the trigger. This is your trigger price. This is your trigger for stops to break even. I'll call it BE. Don't mind my writing. I type neater than I write. So here we go. So once that target is met, then this stop loss entry would automatically move up to your entry price. This stop loss would automatically move up to your entry price. We'll call this SL. So price can shoot up, and as it shoots up, it could come down. And if it comes down, then you have lost $0. And that is the concept behind moving stops to break even. So let's move on to the coding environment, MQL4, and let's talk about how do we do this? How do we do this in code? Okay, so what we will do is I will minimize this. I will pull up MQL4. I already have it here in code, but what we'll do is we will recreate it so that we can, see it from scratch for those that aren't familiar with the MQL4 environment. So basically what we'll do is you'll click File, or you can just click the New button here that's on your toolbar. Once you click New, it'll give you an option of what do you want to create? Expert advisor, custom indicators, and so forth. But what we want to create is an expert advisor. You'll click Next, we'll name it, and we'll call it stops to break even, and I'll call it number 2 because I already have it written in code. So you click Next. You can leave everything here the same, which is basically your on timer event and your on chart event, which you would want to use when you start to expand this logic. If you follow my page, if you follow this channel, we'll begin to expand this where we're managing our risk. Maybe I'll just create a risk series, a risk manager series, where we can manage risk in code. Click Next and Finish. And basically what happens is it creates an empty file or a template file with some pre-built signatures for events that can be raised. We won't get started here. We won't get started or dig deep into these just yet, but what we will do is we'll focus on the on-tick event. And the on-tick event is basically an event that is raised every time there's a price change. The on-tick event is raised. And this is where what you'll do is, this is where you're going to write a lot of your code. So basically what we want to do is we want to start by creating some orders, right? How are we going to test this if we don't have any orders? So the first thing we're going to do is we'll write code to create some entries. So I'll create an if condition. If you're not familiar with this, don't worry, you don't have to type it. If you go into my Telegram group, follow me on Instagram, then go into my free Telegram group, there you're going to find this expert advisor that you can download at any time and use it on your MetaTrader 4 platform. So basically what you're going to do is we're going to say, hey, let's look and see if there's any orders. If there are no orders already running, then what we want to do is we want to create an order. So we'll say if orders total is a built-in function, equals 0, meaning if there are no orders, then what we want to do is we want to perform something, right? What we want to do is, I'm just going to copy code from left to right. What we're going to do is we're going to create, we're going to establish our average trading range. We're going to use our average trading range as our stop loss, okay? So I'll just plop this in here. And basically, this is how you would call your average trading range function. And it'll return a value for the current bar, for the current symbol that the chart is running on. And we will also pull some values for our stop loss, and we'll create an open order for a buy and an open order for a sell based on the previous candle's structure, right? If it's either a bullish candle, then we'll go long. If it's a bearish candle, we'll go short. So I'll break this down here. I will remove this. Basically, I'm saying if the close price of the previous candle is greater than the open, that means it's a bullish candle, right? This is a bullish candle. And what we're going to do is we're going to set our stop loss to be the bid price minus 2 times the ATR, right? That's a standard. People usually use like a 2 times ATR. You'll learn to hide your stop losses and not be so obvious. But for this example, we're just going to set the stop loss on for a buy to be 2 times the ATR under the bid price, right? So then here's your command for sending an order. If you ever wanted to find help, actually cover this now. If you ever wanted to understand what a function does, all you have to do is just mouse over it or move your cursor on top of the keyword and press F1. And there it's going to show you exactly what this method does and how to use it. And it also gives you a little example down below. So that's always good. That's always helpful to know, right? So basically, if the candle is a bullish candle, then we're sending an order for a buy. The lot size is 0.01. We're trading on US 30 at this point. And the stop loss is going to be, once again, bid price minus 2 times ATR. And the target, we're going to make it 200 points for a profit, just so that we can let this run. And then if it's not a bullish candle, then it must be a bearish candle, right? And then this is where we're sending our sell order. Right, so what we want to do is we want to create now a function. We want to call a function on every tick. This is going to run. It's going to say, is there an order? What is the order count? If the order count is 0, then we're going to automatically submit an order. If there is an order, if there's 1 or more orders already pending, it won't do anything because we just want to run 1 order at a time. Right? So then what we want to do is we want to call a method that we're going to write, and we're going to call it move stops to break even, right? We're going to call this method. This method doesn't exist yet. We didn't create this function at all. So what we're going to do is we are going to, so if you were to compile this, let me show you this. If you were to compile this by clicking compile, you're going to get an error. It's going to say, hey, you know what? The method doesn't exist. And also we have another error that's happening here. So let's take a look here. Let's see what's going on. I'll click compile. This is what it is. We'll move this, compile. no errors. I'll uncomment this code, and then we'll create a new method called move stops to break even, right? So we'll say void, meaning it's not returning anything. This is something that we can cover in my coding course, where we'll talk about, how do you write a method or a function, and is it supposed to return something? Is it going to return a true or false value, like is market open, or is new candle, yes or no, true or false? And then based on that return value, you would then write logic, right? You would write logic around it. But in this case, we just want to move stops to break even. We don't have to return a value. We're going to then copy this, and we're going to create this method here, right? And this is the signature for a method that returns nothing. There's no logic. If you were to run this, it would run, but it wouldn't do anything. There's no logic there. So now what we're going to do is we want to establish what the current price is. We're going to put that in a variable, right? Variable is basically a holding spot for information, right? It's just going to hold, it's a container for a value, right? So we're going to create a value called current price. And what we're going to do is we want to loop through all of our orders, and we want to take a look at where the current price is compared to the opening price, and see if it met our target. And if it met our target, then we want to move stops to break even. So we're going to loop through all of our orders, and here's how you would loop through your orders. You'll have a for loop, and this is basically saying for every order that exists, we want to loop through it, and we want to perform something. We can get a little bit more detail later, but this is how you would create this loop. And we would just say, and now what we want to do is we want to select the order, right? So we want to say, if the order, if we want to select the order, and we want to say, let's just do this. This is a method that selects the order, and I'm selecting the current position. So I'm saying for every order that is in that is current, that is actually running, I want to loop through each one, and I want to then inspect the details of that order. So you have to select it, right? So we select it by order position, and we know that it's a trade. And if we can successfully select the order, then what we want to do is we want to compare some things. We want to say, hey, if the order symbol is equal to, let's do this. If the order symbol is equal to what's running in the chart, right? Because this is going to run in a chart, then we want to just make sure that we're processing the proper order. If you're trading multiple positions, you want to make sure that you're running this on the chart that you're looking at, right? So we want to make sure that the order symbol, which is the symbol that the order was made, is the same symbol as what's on the chart. Then we want to get our target prices. So we're going to create a variable, and we're going to call it target price. So I'll create a variable called target price, and we'll step through this again. And we're going to create a variable called target price, so that we know what the target price is. Our target price is going to be our entry point, the point that we opened up the order, right? The point that we opened up the order, and 10 pips after that, or 20 pips, whatever our target pip range is going to be. So it's going to be opening price plus 10 pips. That would be your target price, right? So we're going to define what our target price is going to be also. So if it's a buy, we know that the target price is going to be a pip target. So let's create a variable called pip target. We're going to say double. We're going to say it's a type of variable, pip target equals, we'll call it 100. Since this is US 30, we're going to call it points and not pips, right? But we'll just rename it. We'll call it pip target for now. So we know that for a buy order, then we know that the pip target is going to be, right? If this is a buy order, right? Well, I'm basically saying if the order type of the currently running order is a buy position, then we know that the target price is going to be the opening price, the price that we opened the order at, plus our pip target range, which we know is going to be 100. So it's going to be opening price plus a range, or a pip target 10 pips, 100 pips, 100 points in this case, and that value is going to be our target price. And as once price reaches that target price, then that's what we want to, that's when we want to move our stops to break even. So I'll copy this block of code here. Let's see here. If this, let me just give me a second. I'm moving this over. Right. We're going to say, here's the logic behind it. Will this compile? Yes. Okay. We're saying if the order open price is not equal to stop loss, right? So that means the order open price and the stop loss aren't equal. That means that the stop loss was never moved up to the the open price, removing risk. So if the order open price is not equal to the order stop loss, and the current price, which we know the current price is the closing, is the value of close of the current bar, the current price, and the current price is greater than our target price, right? So the current price that's running now is greater than our target price. And we already established our target price is the opening price plus our pip target. So if it's greater than that, then we know that we have reached our target. And in addition to that, excuse me, and in addition to that, we also know that the stop loss value for this particular order is not equal to the order open price. So therefore, we want to perform an action and we want to move this order or move this stop loss to the open price, removing risk off the table. So here is the logic to modify the order. And here you have it. It's basically, it's saying modify the order, and what order are we modifying? We're modifying the order for a specific ticket number, and we can pull the ticket number. The system will know as we're looping through orders, we have access to details about that order. And one of the details that we have is the order ticket number, also the order open price. And basically what I'm saying is, and I'm going to pull this up, what I'm saying here is that the stop loss, this is the stop loss value. If you see this pop up here, it says the stop, we need to provide a parameter called stop loss. And we have to set it to a value. Well, what is the value of that stop loss? The value of the stop loss we're setting to is going to be the order open price, right? So that's what's moving your stop loss from a value that is going to be in the negative in drawdown to the order open price. We're setting the open price and the stop loss value to be the same. And that is what's moving your stop loss to break even in a buy situation, right? And we have to do the same thing for sell. So for the sell, we have to basically just, this is the logic for the buy here. This is the block of logic for the buy. And all we have to do is just reverse this logic for the sell. So I'm going to copy this. And I'm going to then put in sell logic, right? And we know that this is buy logic. And I will minimize this a bit. We know this is buy logic. It's always good to add comments to your code so that you can kind of like read it along the way. It's not documentation, but it's actually coders' notes, right? So here, we know that this is sell logic, so we're going to change this to sell, opt sell. And we're going to set the target to be order open price, not adding the target price, but subtracting it, right? Because we're in a short position. This is a sell, so we're going down. So the target's going to be your open price minus a pip target range. So we're going to remove that there. And we're going to say if the order open price is not equal to the stop loss, or if the stop loss is not equal to the open price, meaning the stop loss is still not at a risk-free position or risk-free price, then we obviously want to continue with our logic. And we're saying, and the current price, once again, we know what the current price is greater than or equal to the target price. Or in other words, if you were to reverse that logic or that statement, you would say the target price is less than the current price. So that means that the target price is, the current price is less than the target price, so the target price is greater than the current price. So that means that it's bypassed, or not bypassed, but it's passed through our target, and now we want to perform something. And this is the logic, once again, for the modifying of the order for the sell price. And that's really all you need to do. We should be able to compile this with no errors. You see here, no errors, 0 errors. And let's zoom out. And that's it. This is your expert advisor that we've created. We've put in logic that will move stops to break even automatically when you define a pip target. And what we're going to do is we're going to get fancy here, and we're going to, let me just move my stops to break even. We're going to copy this parameter here from the script that I wrote into the script that we just created. We're going to, although we defined, let's find it here. We defined our pip target. We're going to replace that, and we're going to include the word input in front of it. We'll remove this. And input, what that means is that when we run this, this will be a parameter that is available to you, the trader, to define. So you can say, hey, I want to set my pip target to be 200 on one particular pair. But if you're running this on, another pair, you can set your pip target just to be 0.0100 if you're trading, say, GJ. For 100 points or 100 pips. So this is something that will be available to you. So if we were to run this, and we'll run this in our strategy tester, once again, our strategy tester, we know that it's an expert advisor. We know we want to run the stops to break even. We would click start. And before we let it run, it's running, but I like to zoom in a bit. I like to set my charts to be what I want it to be. I want it to be a bar chart. I don't like the graph. And now if we run it, you will notice, let's see here. This is, and I want to find a fresh position here actually for you, right? But the stops in this case is already at break even, but let's see what happens. Let's let this either hit target. This is the TP. This is the break even, which is at the stop, which is at the open price. So risk is removed. It's bouncing off that level. Let's let it run. Let's see here. Let's let it run. Let's let it touch. Come on. Come on. Okay, this is going to tease us for a little bit. Boom. Okay. And it ran through so much it hit the next it hit the next target. Let's see here. Let's see if I could find it. Oh, wow, it's running so fast. Okay, cool. Here's a good one. So we know here, this says sell. You may not be able to see it on the screen, but this green bar is a sell position. The bar below it, this bar bottom red, is a take profit. It's take profit. That's your target. It would close the position. Here's your stop loss. So we know that right now we have a stop loss that'll put us in the negative. And let's see if it will move the stop loss to break even. And the way we would know that is if it actually moved it. It's a buy now. But if it moves the stop loss, if you see that the green bar goes away and it's replaced with the red, then you know that it's running at a risk-free with 0 risk on the table. It's probably better for me to just show you the results. So let me pause here. Let's go to results, and you'll see here, look at this here. There's 0 profit or loss, right? So we know we went into a buy. This is a buy of 0.01. And then what happened is we modified the order and we moved the stop loss to the open price. So if you see the price and the stop loss, they're equal. So that means we moved the stop loss to the open price. And then the next thing that happened is that the stop loss was triggered, and it's giving us a value loss or profit of $0. So we didn't win, we didn't lose. And that's great, right? So we could eventually write code to say, hey, let's take risk off the table. Let's remove 50%, or let's reduce the position down to 50% of its original position, taking profits and then moving stops to break even. That'll be our next exercise. But there you have it. If you see that this, if you feel that this is giving you any value, then please like, subscribe. I'll create more videos, and you can get this EA for free in my Telegram channel. Just click on the links below, follow me to my Instagram page, where there you could then go to my Telegram group and download this and use this in your trading strategy as you wish. Thanks for watching, and have a good one.